Welcome to Volatility 411. I'm Kevin Davitt, part of the Options Institute at SIBO Global Markets. Now let's briefly look back at last week where U.S. equity markets made new all-time highs in lockstep on Friday. The VIX index measured in a narrow range over the past week, highs below 23 and lows around 20. There is yet to be a VIX index close below 20 since February. Now today the S&P 500 is slightly lower and big tech is slightly higher. The VIX index reading is higher by about 1 point to just below 22 this morning. The futures term structure has remained fairly consistent of late. There's a slight contango in the front with the belly and the back end of the curve quite flat around 25 and change. Now, for the past 3 months in VIX options, trading has been essentially split between calls and puts. In other words, the ratio has been very close to 1-to-1. But that's historically unusual. In a more normal environment, far more VIX calls would trade than puts. But keep in mind that 2020 has been far from normal, and the VIX index and futures have been elevated relative to normal for many months. The mini VIX futures have now been trading for about 4 months, and we're excited with the continued growth and tight markets. The mini VIX futures have a contract multiplier of 100, meaning every 1 point move in the futures contract is plus or minus $100 for the long or short. Now, in economic data due out this week, the calendar is relatively light. There's the regular Thursday jobless claims, CPI, and the federal budget on Thursday as well, plus PPI and consumer sentiment on Friday. Now, for our history fans, today is the day that will live in infamy. It's been 79 years since the attacks on Pearl Harbor. That's a wrap for Volatility 411 for Monday, December 7th. Thank you very much for tuning in.